Imagine your favorite car parked out front, shining bright, neighbors giving thumbs up. But what if it's quietly slipping into trouble? Sales slowing, rumors swirling, resale value fading fast. We're mixing up the order to spotlight 13 brands facing tough times, unpacking tariffs and hidden issues that could hit your wallet hard. Stick around. Number 13. Genesis. You saw Genesis and thought, wow, sleek looks like a Mercedes. Cool tech to rival Tesla, all at a friendly price. It felt like a steal, didn't it? But buyers looking for big-name bragging rights noticed the Hyundai badge underneath, making it seem more like a fancy cousin than real luxury. Since June 2025, folks say Genesis is hitting bumps, with 25% tariffs pushing car prices up about $6,000. Even US-built ones need parts from Korea. You're stuck at dealers shared with Hyundai, waiting by everyday cars instead of feeling special. The electrified G80 faded out in August, with first-half sales down 77% to barely a few dozen, as folks picked SUVs and worried about past breakdowns. Back in 2022, 95,000 cars got recalled for fuel pump issues, shaking buyer trust. And now 2025 models have people chatting about wiring troubles and steering wobbles online. Resale values are slipping, making trade-ins a tough deal. Whispers suggest Genesis might roll back into Hyundai by 2026, leaving your GV70 in a weird spot. If Genesis pulls back, your sharp ride might not find many buyers. But that's a soft slide. The next American name's hitting the brakes hard, with inventory drying up fast. Number 12. Buick. Buick has that cozy ride feel, like a step up from everyday cars without going overboard. You pick the Envision for its simple style and good value, thinking it was a smart middle ground. But the old idea of it being just for older folks lingers, even as it tries to look more modern. In the first half of 2025, sales jumped 29%, with 74% new buyers giving it a fresh start. Yet most models come from China, facing 47.5% tariffs that could raise prices quick. April saw inventory drop low, third worst for supply, and July brought news. GM stopped 2026 Enclave sales, along with Traverse and Acadia, over some quiet production snag. Owners report brake issues in 2024-25 cars, like fluid leaks needing full fixes after just 2,000 miles, leading to some complaints. Critics say they look too much like Chevys with a nicer badge. That Tiger Woods ad try years back didn't help much either, costing a lot for little buzz. Resale might slip as dealer spots shrink, with GM maybe focusing more on China's big market over 1 million sales strong. Folks say it's not exciting enough for young drivers or cheap enough for budget folks. Your Encore could end up hard to sell if turbo or oil problems show up. But that's a steady slowdown. The next luxury pick at 11 is facing its own quiet changes. Number 11. Infiniti. Infiniti grabbed your attention as a fresh choice for luxury. Think Q50 with a sporty feel over the usual BMW options. You went for that unique style, hoping for something different. But over time, sales have been dropping, making the brand feel less special. In the first half of 2025, Infiniti sold about 25,000 cars in the US, with the second quarter down 12.7% from last year. The company expects around 50,000 for the full year, a 13% drop. Standalone dealers are closing up, moving into Nissan spots since late 2024, which takes away from the luxury vibe. Models like the QX50 and QX55 are ending this year, and the Q50 sedan is already gone, leaving fewer choices. Folks say older issues like electrical glitches and transmission shifts still pop up. Consumer Reports predicts below-average reliability for new ones, with owner stories about suspension warnings and screen troubles. Whispers suggest Infiniti might blend more with Nissan by 2027, with EVs pushed back. Your car could see lower resale values and fewer places for service. If things keep slipping, it might be hard to sell or fix down the road. But that's a quiet fade. The next brand at 10 is dealing with even more repair headaches. Number 10. Lincoln. Lincoln brings back memories of those big quiet rides for important folks, like the old town car that felt so smooth and special. You chose it for that calm comfort, perfect for long drives without a lot of fuss. But lately it's been dealing with some nagging problems that make owners think twice. In the 2025 J.D. Power study, Lincoln ranked 19th overall, which is below average but a step up for the brand. Consumer Reports predicts the 2025 Aviator will be less reliable than most new cars based on past models and brand trends. Owners have shared stories from May about the Aviator not shifting forward or into reverse, leaving them stuck and calling dealers for help. Air suspension can sag over time, and coolant leaks lead to overheating, while transmissions sometimes hesitate in older styles like the MKZ. The Takata airbag issues from before still hang around, and electrical glitches pop up, along with AC that quits on hot days in the Aviator. Younger buyers seem to skip Lincoln lots, heading for BMWs instead, as showrooms feel quieter. Fixed costs add up quick. Resale values hold okay for some models like the Corsair, at about 50% after 5 years, but trouble spots can make it drop faster. Folks say Ford might team up with other brands if rankings don't improve soon. Lincoln's got that classic name, but without better fixes it could leave owners with a ride that's hard to pass on. That's a bumpy road. The next one at 9 is feeling the squeeze from import fees even more. Number 9. Mitsubishi has that fun rally history. Like cars built for tough trails and good deals. You pick the Outlander for its solid off-road feel without breaking the bank. It seemed like a reliable choice for everyday adventures. In the first quarter of 2025, U.S. sales reached 31,637 units, up 11% from last year. But in August, the company cut its full-year profit forecast by 30% to about 70 billion yen, blaming U.S. tariffs and softer demand. Those 25% import fees are raising prices and stalling shipments at ports, leaving dealers short on stock. The Mirage is no longer around, and models like the Eclipse Cross aren't moving as fast. Back in 2016, a fuel data mix-up affected over 600,000 cars, costing billions and leading to Nissan's bigger role. Owners mention transmission slips, weak air conditioning, and engines that won't start sometimes. Resale values can drop quick with these issues, and tech feels a bit outdated. Folks say Nissan might take full control soon, which could change things for parts and service. Your Outlander might end up costing more to keep running. That's a tricky path. The minivan favorite at 8 is heading toward a quieter time. Number 8. Chrysler. Chrysler used to be the go-to for big family haulers, selling over 600,000 cars back in 2005 when minivans ruled the road. You might have picked the Pacifica for its roomy setup and plug-in option, thinking it was a solid family pick. But sales have dropped a lot since then, down to around 125,000 in 2024, showing how times have changed. A 29% dip from last year's 70,882. Combined with the Voyager, that's 57,756 minivans total, off 18.5% year-over-year, while Toyota's Sienna and Honda's Odyssey are picking up speed. The 300 sedan is out of production, and the Voyager is mostly for fleets now, leaving the Pacifica as the main player. The Airflow EV is still just a cool idea on paper, with no set launch date yet, and a new crossover got pushed back to 2027. Stellantis CEO Carlos Tavares has said some brands might not make it past 2026, and Chrysler's on that watch list. Dealers are feeling the pinch too, with high inventory and complaints about too many discounts hurting the bottom line. For owners, resale values are sliding, and with fewer dealers sticking around, service could get tougher. Past issues like emissions tests and engine stalls still make people nervous about trust. Your Pacifica might feel like a good deal now, but down the road it could be harder to sell or fix. That's a slow shift. The Italian style at 7 is seeing ups and downs too. Number 7. Alfa Romeo. Alfa Romeo turns heads with its sharp Italian style and fun driving feel, like the Giulia that promises excitement on twisty roads. You grabbed one for that special spark, thinking it would stand out from the crowd. It has that classic charm that makes everyday drives feel a bit more alive. In the first half of 2025, U.S. sales dropped 34% to just 3,164 cars, with the Giulia down 32% and Stelvio off 40%. Second quarter fell another 51% from the first, leaving dealers with only about 3 sales a month. Globally, things look better with 20% growth, especially in Europe up 33%, but the U.S. market feels the pinch harder. Owners talk about electrical glitches that pop up on the dash, infotainment screens freezing mid-trip, and oil leaks that need quick attention. What Car's 2025 study ranked Alfa second from the bottom for dependability, with some models showing seat wear and cheap-feeling interiors over time. Routine fixes like spark plugs or belt changes can run higher than average, adding up for long-term owners. Folks say Stellantis might look to sell Alfa amid tariff troubles, with some Chinese buyers showing interest to keep it going. That could mean fewer dealers and parts down the line, hitting resale values for your Stelvio. It's got style, but support might slip away. That's a tough spot. The next Italian name at 6 is seeing even slower sales. Number 6. Maserati. Maserati has that exciting Italian spirit, with models like the Levante offering a smooth mix of power and style for special drives. You might have chosen one for the thrill it brings, feeling like a touch of real luxury every time you hit the gas. It's the kind of car that turns heads and makes you smile on open roads. In the first half of 2025, sales fell 32% to just 4,328 cars in key markets, with the US down 37% to 1,830 units. The first quarter was even tougher, dropping 48% to only 1,700 vehicles sold worldwide. Models like the Ghibli are sitting longer on lots, as buyers turn to options from brands like BMW that feel more reliable. The company posted a €139 million operating loss for the first half, a tough hit after last year's €260 million shortfall. Tariffs are adding 25% to import costs, especially in the US, which makes prices climb and hurts sales. Electric plans like the MC20 Folgore got delayed after Stellantis cut a big investment, leaving the lineup feeling stuck. In June 2025, Jean-Philippe Imperato stepped in as the new CEO to help turn things around, with a fresh business plan coming soon. Folks say without a quick buyer or big changes, the brand might face shutdown talks by 2026, worrying owners about parts and service. Resale values could drop fast if support fades, turning your Levante into a harder sell. That's a challenging turn. The British brand at 5 is losing its edge too. Number 5. Jaguar. Jaguar always had that smooth, classy style, like the F-Type that made you feel alive on every curve. You picked one for the fun drive, and that British charm that stands out. But now the lineup feels a lot smaller, with many favorites no longer around. For 2025 in the US, the only new model left is the F-Pace SUV. The E-Pace, XF F-Type and I-Pace are all discontinued. Dealers are selling off the last stock of those older ones, while the F-Pace carries over with small updates like better cameras and a stronger engine in the SVR version. New electric models won't show up until late 2025, leaving showrooms pretty empty for now. In April 2025, Europe saw just 49 cars registered, down 97.5% from 1,961 the year before, with year-to-date sales off 75%. The big rebrand, dropping the Leaping Cat logo for a simple J and slogans like Live Vivid, got a lot of pushback for feeling out of touch. Folks online called it confusing, with no cars in the ads, and even big names like Elon Musk chimed in on the odd vibe. Owners worry about resale dropping as lots stay bare and trust fades. Plus, a recent cyber attack in September halted production until October. Whispers say Tata might fold Jaguar more into Land Rover if the EV switch doesn't pick up speed by 2026. Your F-Pace could feel alone out there, harder to sell or service. That's a tough change. The big player at 4 is losing money fast too. Number 4. Nissan. Nissan used to be a favorite for fun cars like the Z and GTR that got hearts racing. You might have picked a Maxima for its strong pull and roomy feel, seeing it as a reliable daily driver. But lately sales have been tough, with the Maxima down over 90% in some spots, dropping to just a handful sold each quarter. The Altima is holding steady but not growing much, around 62,000 units in the first half of 2025 as buyers lean toward trucks and crossovers. In the first quarter of 2025, Nissan reported an operating loss of 79.1 billion yen, about $535 million, marking their first quarterly drop in over 4 years. For the full fiscal year 2024, the net loss hit around 670 billion yen, or $4.5 billion, due to weak sales and rising costs. Tariffs on imports are adding pressure, and talks for a merger with Honda fell apart in February over control issues, leaving Nissan without that big backup. Efforts to team up with Stellantis haven't gone far either, keeping things uncertain. The company has cut about 20,000 jobs worldwide and closed 7 plants to save money, but that means fewer spots for service and parts down the line. 2 planned U.S. electric vehicles got canceled, slowing their push into greener rides amid shifting demand. The old Ghost scandal from 2018 still casts a shadow, with fresh emissions claims in 2025 adding to trust worries for diesel models. Folks inside say Nissan has just 12 to 14 months to find steady help or make big changes. For owners, resale values are slipping fast, with models like the Rogue or Altima losing up to 50% in 3 years, making trade-ins a smaller payout. Service might get spotty with fewer dealers, and if no partner steps up, your ride could feel riskier long-term. It's a big shakeup for a name that once led the pack. That's a heavy load. The next spot at 3 is an EV dream turning into a money pit. Number 3. Lucid. Lucid caught your eye with the Air sedan, promising up to 516 miles on a single charge and a smooth high-tech ride. You picked it for that top-notch range and luxury feel, thinking it was the next big thing over Tesla. But behind the scenes, things have been shifting, starting with a big change at the top in February 2025. Peter Rawlinson stepped down as CEO and moved to a strategic advisor role, while Mark Winterhoff took over as interim CEO to keep things steady. In May, the team talked up plans to boost production, aiming to double output to around 18,000 to 20,000 vehicles for the year. But the fourth quarter of 2024 brought a tough hit, with a $400 million loss that added to the full-year total of $2.7 billion. The stock has dropped over 95% from its high, and Saudi investors hold a big say in the company's path. Owners have reported power issues, like sudden drops while driving, leading to recalls for over 5x100 Air models in late 2024 and more in 2025 for software glitches. Things like wiring problems or high-voltage faults can cause warnings or even a full stop, though steering and brakes still work. Software updates help fix it over the air, but it leaves you wondering about reliability in a car that costs 6 figures. Lawsuits have popped up too, with claims that leaders overstated production goals to grab big pay packages, plus labor board issues over firing workers who supported unions. Folks say the company's unsteady right now, which could make resale tough and service a bit of a worry. Your Lucid might feel premium today, but tomorrow, that's up in the air. That's a rocky road. The comeback story at 2 is hitting even harder bumps. Number 2. Fisker. Fisker came back strong with the Ocean SUV after a tough start back in 2013, promising a fresh take on electric driving with cool looks and smart features. You might have picked one for that forward-thinking vibe, seeing it as a smart bet on the future. But things started going sideways soon after deliveries kicked off in 2023, with production halting by March 2024 due to money troubles. By June, the company filed for Chapter 11 bankruptcy, leaving owners wondering what came next. In July 2024, a leasing company called American Lease bought about 3,300 unsold Oceans at a deep discount to keep them on the road for rideshare drivers. The Fisker Owners Association stepped up in September 2024, pulling together folks to push for software fixes and better support after the bankruptcy. Court hearings in October 2024 wrapped up the liquidation plan, agreeing to keep cloud services running for 5 years starting in 2025, so cars stay connected. But by May 2025, owners lost cloud access, and software recalls got stuck, making daily use a hassle. The Ocean has faced several recalls, like one in November 2024 for a rollaway risk affecting all 7,745 US models, fixed with a software update that adds an auto hold feature. NHTSA looked into door jams and power loss issues earlier, with more probes closing after updates in late 2024. Owners report hoods popping open on the highway and sudden stops that feel unsafe, adding worry to every trip. Even with the association's help, getting parts or fixes is getting harder as time goes on. The SEC started looking into Fisker in 2024, sending subpoenas over possible rule breaks tied to records and finances during the wind down. Folks say it could mean more headaches for leaders like Henrik Fisker, with claims of overstating plans to draw in funds. For you, resale values have tanked, and without steady service, your Ocean might sit more than it drives. It's a letdown after the big promises. That's a hard lesson. The top spot at 1 is an even quicker fade. Number 1. Canoo. Canoo started with big dreams of cool electric vans, like the boxy ones that looked ready for work or fun trips. You might have heard about their deals with NASA for special rides and Walmart ordering 4,500 units to zip around stores. They planned a factory in Oklahoma to bring 1,400 jobs, making it seem like the next hot thing in EVs. But in January 2025, Canoo filed for Chapter 7 bankruptcy, shutting down all work right away. The filing showed about $126 million in assets, but $164 million in debts, with cash running low. They couldn't get a key loan from the U.S. Department of Energy or pull in money from other places, leaving the Oklahoma plant dark and workers without jobs. In March, CEO Tony Aquila set up a new company to buy most of the leftover stuff for $4 million, skipping leases and old bills. A judge okayed it in April after turning down other bids, including one from a group with foreign ties that raised flags. Former workers filed suits under the WARN Act for sudden layoffs without notice, and some pointed fingers at shady moves with the assets. Those Walmart vans and NASA prototypes, now just sitting around, hard to use or sell. For owners, it's rough. No more warranties, parts are tough to find, and resale values have dropped to almost nothing. Folks say this quick end shows how tricky the EV world can be, even with big names on board. Your Canoo might have felt like a smart pick once, but now it's a reminder that not every promise lasts. Wrapping up the ride, we've covered the tough spots from Genesis and Buick facing tariff hikes to Jaguar and Nissan losing ground, and EV upstarts like Lucid and Fisker hitting big bumps. These brands show how sales slips, reliability woes, and scandals can turn a great car into a resale headache. Owners end up with higher fixes and fewer options, all while the industry shakes up. Looking ahead to 2030, experts see a smaller field, maybe just a handful of big names like Toyota, Volkswagen, and Tesla leading the pack, with EVs hitting 45% of global sales. China's EV exports are booming too, up 19% in early 2025, adding pressure on everyone else. Fewer cars on roads from changing lifestyles could mean bailouts or big changes for the rest. Think about your own ride. Could it hold strong or face the same fate? Hit subscribe and ring that bell to catch more tips on dodging car pitfalls. Next up, brake fixes that save your wallet. What's your biggest worry? Drop it in the comments.